This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, July 7th, 2016. Euro dollar. So the euro continues to chop around, but overall the tone is quite bearish, with the market recently stalling out ahead of 112 and looking like it's on the verge of rolling back over. Of course, a break back below the recent low that we saw on the 24th of June at 109.12 would be required to accelerate declines towards next key medium-term support at 108.23. Only back above 111.87 at this point would take the immediate pressure off the downside. Sterling dollar. So cable has been locked within this historic downtrend, with the market now trading just off its recent plus 30-year lows, trading to its lowest level since June of 1985. At this point, the pressure remains on the downside, and the focus is on the psychological barrier at 125 further down. There is risk with daily studies oversold for some form of a bounce, but ultimately we need to see a break back above the weekly high right now, which comes in around 133.40 to take the immediate pressure off the downside. Dollar yen. So dollar yen remains confined to its downtrend. The market looked like it wanted to put in a lower top ahead of a bearish continuation, but we need to see a break back below that 2016 and multi-month low at 98.99, going back to the 24th of June to confirm the bearish downtrend, or a continuation of the bearish downtrend and open a fresh downside extension towards next key support in the 93 area. At this point, a break back above recent highs, which come in around 103.40, would take the immediate pressure off the downside. Euro Swiss. So Euro Swiss continues to be confined to some choppy, tight trade. We did see several days back a breakdown to fresh 2016 lows at 106.23, but that's looking like a blip right now, and the market ultimately remains confined to a range trade with support coming in around the 108 area. Again, it hasn't really been able to establish below 108, certainly not below 107 on a close basis, and while we hold above the 108 area, there is risk for another bounce back towards the range highs. If we do see a close back below 108, and certainly below 107, it will put the pressure back on the downside. Aussie dollar. So Aussie continues to chop around, but overall the market is showing signs of wanting to top out after recently rallying up to 76.47. At this point, look for the market to roll back over, with deeper setbacks seen towards 71.45, next key support. If we do see a break back above 76.47, however, this will take the immediate pressure off the downside. Dollar CAD. So dollar CAD has been slowly grinding out what appears to be a meaningful base, but the market is going to need to establish above 31.89 to confirm that outlook and open the door for an acceleration of gains towards the 135 to 140 area. But while the market holds below 131.89, we can't get too bullish, and there is risk for additional setbacks. Ultimately, though, only back below 26.55 would negate the constructive outlook. Kiwi dollar. So Kiwi has pulled back after recently putting in 2016 highs at 72.97, and while the pressure remains on the top side right now, if we see a break back below 69.63, it will do a good job of putting the pressure back on the downside, accelerating declines next towards next key medium-term support at 66.75. SPX 500. So the S&P 500 continues to chop around off just the record highs that we saw in 2015. We recently traded up to as high as 21.28 in 2016 before reversing sharply post-Brexit. However, the market has since rallied all the way back above 2100. At this point, it's going to be interesting to see how the market responds to some initial resistance in the 2110 area. If we establish back above there, then we could see a move back towards those record highs from 2015 at 2133. At the same time, inability to establish above 2110, followed by a break back below the low that we saw in Wednesday trade around 2073, would strengthen the bearish outlook and open the door for a resumption of declines, potentially back towards 1990, those extreme lows that we saw going back to the 27th of June. Gold. So gold retains its extremely constructive outlook, with the market on pace for a test of a measured move objective at 1400 over the coming sessions. At this point, look for any setbacks to be very well supported ahead of 1300, while only back below 1250 would really compromise or take the immediate pressure off the downside. Overall, again, the market has put in a major base and is looking increasingly constructive.